Hello everyone and welcome to today's Fintech Finance Virtual Arena. Now joining me today is Alex Young, the Head of Corporate Sales of EMEA over at Bank of America. So Alex, thank you so much for joining me here today. How are you doing?
No, I'm great, Doug. Thanks very much for having me.
Oh, it's absolutely a pleasure because we're going to be talking about some really interesting things from EuroFinance and to the really shifting nature of corporate banking. With that in mind, can you give me a bit of background to your role at Bank of America and how the last couple of weeks have been for you?
Sure, thanks. Yeah, so look, I've been with the bank for around about 8 years now, and my responsibility is to look after our large corporate relationships across Europe, Middle East, Africa. So I have a team of around 45 people based across 11 different countries. And again, we're there to support our large corporate clients with all of the global transaction services that Bank of America offers, which ranges from cash management, trade finance, commercial cards, and liquidity management.
Absolutely brilliant. So, with that in mind, the EuroFinance conference was held last week. So, it's often considered the number one event for a lot of treasurers. What do you think is the top of the mind for a lot of treasurers right now?
So firstly, it was great that EuroFinance were able to pull something as successful together as they did, given the current circumstances across the world, and to have over 4,000 delegates, and the majority of those being from large corporations across the world, and representatives from Europe, Asia, and North America as well, and Latin America. It was great to hear all the different clients talk about the challenges. Clearly, the COVID impact dominated proceedings. How companies are looking at the liquidity risk that's been created by this situation, how they are strengthening balance sheets through this time. Bank relationships exceptionally important. I'm not just saying that because I work for a bank, but the relationships is what we build with our clients over many, many years, and the ability for us to be there to support them through this time. It was nice to hear so many clients recognize that during the conversations that they had. Again, outside of that, the usual things that are dominating, treasurers' minds around the geopolitical risks that are out there, whether it's trade wars, whether it's the onset of Brexit, some of the kind of interest rate risks. Are we going to see more negative rates across the environment as well? The old favorite of cash flow forecasting never goes away. I don't think anyone has mastered that yet. I think we're still so many companies searching for the solution there, and it's all about the quality of the data that's contained within their businesses. So, and then finally, I'd say, definitely more and more continued talk around innovation and digitalization as well.
That sounds like they've got a lot on their plate, let's say. So, what do you think within what you mentioned has been the key challenge for a lot of treasurers? Do you think that the pandemic might have made a lot of treasury departments, a lot of finance departments a bit more resilient?
Yeah, I think so. And I think a lot of the companies that we heard from and the companies we talk to every day, they've all prepared for this kind of scenario. So, they all have a good BCP strategy in place. But then when reality kicked in that this was going on for longer than the usual period of time that we anticipated, I think really the companies, all companies being focused on their people first and foremost, making sure, of course, health and well-being are top of mind, families, that kind of thing. But actually then, is it sustainable to be working from home? Do we have access to the right systems? Do we have the right connectivity? Do we have the right data to work with to make, informed decisions? And just team connectivity as well, and how regularly do people meet? And I think over communication we've seen has been key during this time as well. I touched on this earlier, but liquidity has been front and center. I think the stability of a client's balance sheet and making it robust to see it through the cycle of this pandemic is exceptionally important. And that's where clients have been tapping into the capital markets. They've been looking at alternative sources of funding, and I think that's been critical for them at this time. The other thing I would say, and where we've been trying to help clients with kind of best practice guidance or some of the ways to mitigate fraud, because unfortunately we have seen a heightened threat of cybersecurity and fraud across our client base as well.
Yeah, I think that's been a universal issue for a lot of institutions, whether in finance or other verticals. But I mean, speaking of all these different verticals, I think one of the biggest changes has obviously been, I mean, it seems almost grandiose to say, but society has changed, let's be honest. You've seen there's been a focus, as you said, on families. How can banks who are traditionally quite stoic in maneuverability continue to innovate at that change, that the pace is just quickened so fast? Can you tell me about Bank of America developing your digital offering in response to these global changes?
Well, I guess the good news, Doug, for us is that the bank has been investing in technology and innovation for a considerable amount of time, and we're talking multi-million-dollar investment as well. And what that's enabled to do is when we reach this sort of critical time where clients were unsure how they could communicate with us, how could they exchange documentation with us, to get important signatory updates, basic banking infrastructure that they're required to see them through this initial onset of the pandemic. We were able to actually accelerate a lot of our digitalization that we put into our banking infrastructure. So, one critical thing was the ability for us to accept e-signatures, for example. There were so many clients of ours that were unable to get back into offices, unable to access the paperwork required usually to sign account opening agreements, to sign commercial card contracts, and critical important for them to be able to operate their businesses. So the ability for us to, as I say, accelerate this offering to our clients, the ability to take e-signatures, to move things through more quickly, and to establish that critical infrastructure, that I think has served our clients very, very well. I think on top of that, looking forward, we are trying to enhance the end-to-end experience for our clients anyway, and this just plays an absolute part in that. I mean, we've taken clients on a journey, for want of a better word, from paper to digital, whether that's through payments, from paper to electronic payments, whether that's in our commercial card space where we've moved away from physical plastic into kind of virtual cards and mobile wallets. That's something that's new from our bank this year. All these things are helping clients think about more digital access in Treasury, and ultimately, creating an interface for our clients to come in and manage their business directly, not having to, sign papers, not having to phone people, doing it all themselves, but being able to get full visibility of their banking infrastructure. So what signers are in what location and a full audit trail to back that up. So, the bank's investment in this space has been key, and, we're seeing that come to the fore during this current time.
Now, in this time of increased digital savviness, would it be fair to call the role of the treasurer and the CFO as one of the more important roles of a large organization now, with all that digital back-end transformation and the pandemic? How has the health crisis actually increased the focus on their role?
Yeah, it's a great observation. And I've spoken before about the evolving role of the treasurer, and I think we saw, even after the last crisis that we had at the end of 2008, we've seen the role of the treasurer completely transform within the large corporations that we work with across the globe. They are a pivotal part of the company strategy. The balance sheet remains the core focus of the company, the working capital that the company provides. I think the communication and the association that Treasury has with all of the business partners, end to end across the corporate landscape is exceptionally important. Those relationships and that kind of alignment in terms of goals and opportunities, that has all enabled the companies to make decisions that will be to the financial health of the company. And I think that's where Treasury is really, really important. And as you rightly say, Doug, at the moment, the treasurers are the critical component of all companies. They're having to report more frequently to the C level of the company around the reporting of the business. What does the balance sheet look like? What's the capital adequacy? Everything that's within the company's remit is stems and it's critical around the balance sheet application. So I think that's where certainly we've seen Treasury evolve, and for them to be able to even provide best practice to some of their business partners around how they can help, drive perhaps the working capital benefits to the organization.
Okay, so crystal ball time. What will be the key priorities for corporate treasurers or finance departments over the coming months? How can you help support them ensure future success? And since they're so important now, go on and springboard to really go and thrive.
We've actually seen that the current global health crisis has been an accelerator of change. And that change, comes in many different guises. We've seen certainly a move towards digital, and more companies embracing that, it is safe and it is secure to exchange documentation. We don't need physical documentation like we did in the past, and there's a lot more comfort, I would say, on the corporate side, and that speeds up processes and allows business to be done more expeditiously. I think also, if we think about how companies look at working capital, and we're working with a lot of companies at the moment around, how do we break down the working capital cycle for them, and do we analyze their, the payments to their suppliers? It's not just how we help the company make those payments and perhaps delay those payments, because they can't really go back to suppliers at this point in time and start renegotiating commercial terms. It's just not possible. So how can we help them extend those payables out? But also, using things like supply chain finance programs or solutions that the bank offers, we're also, providing access to liquidity for those end suppliers as well, who may not be able to access liquidity from their own source as well. So I think, supplier health is important as well, and helping the client think about how they can extend that payable cycle out is really, really important. And, you can do that through trade finance, or we're even using commercial cards even to look in that space as well. And then on the cash application side, I'd say important to get your money in as quickly as possible. There's a lot more evidence now that proper thematic learning and AI can be really, really helpful in terms of getting cash applied to the book as quickly as possible. And we've obviously developed solutions in conjunction with a fintech partner to be able to offer that integrated into our own systems, but the ability to kind of do that automated cash application and speed up that process of accounts receivable more quickly. I would say the other thing we're looking at right now is developing cash flow forecasting. I touched on it earlier on. It still remains one of the key challenges to all treasuries, but we're looking at ways to integrate again into our own systems the ability to have some cash flow forecasting techniques within that, using the data that we have, but allowing companies to make more informed decisions.
I think that would be so important.
Yeah, thank you. I'd say the final area, and I think a lot of people are talking about this, and I think again the pandemic has brought a lot more focus on ESG. I think we hear about it a lot. Many companies now at the C level are looking at their own ESG score and how they look at investors, or investors look at them in terms of investing into corporations, and the sustainability of their supplier base and the ethical side of the business. So I think more and more we're going to start to see ESG conversations coming into banking conversations, and as a result, the bank is also looking at its own development of sustainable financing and other solutions that would help companies meet their objectives.
Alex, that's absolutely brilliant. Thank you so much for your time. I hope you've enjoyed yourself as well. It's been really fascinating hearing the massive changes in corporate finance. So thank you.
No, thanks, Doug, and thank you very much for the opportunity to talk to you today.
Well, it's been an absolute pleasure. And to all our viewers, thank you so much for watching as well. You can, of course, catch the rest of the series and much more over at www.fintechf.com, and, of course, YouTube and LinkedIn. So I'll see you there. Goodbye.